following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're actually ready this morning. Let me know if you guys can see me, and let me know if you guys can see the screen here. Just want to make sure. I think we're all set. Okay. We're going to have Joey on one more time today, and specifically we're going to talk about these China A shares and B shares and all the things going on between the Shenzhen exchange, the Shanghai, and the Hong Kong, and how this interconnects. Because a lot of people have questions on that. They kind of blow through it on the TV every once in a while, but there's really no definition to it. So hopefully we're going to get down to business when it comes to that. And first of all, today, I want to say that we have reached some targets on the S&Ps, and we've kind of rattled around this inflection point here. We've overshot it a little bit. What does this all mean? We for a while we've been looking at, and I've specifically been looking at, let's use some of these inflection points as support or breakout mechanisms on the long term, and sometimes on the 240s to try to just find support to buy or find these breakouts. And we talked about this 44 and the 75 area that's happened recently. That has been a really cool situation because we were able to kind of get our head back above water, this 44 situation, and be able to travel into the 75. So now that we've reached long-term goals on this particular move up, and again, I'm talking, getting back above 1832, 33, playing this, it was not easy. They never make it easy. We talked about that the other day. When they jerked it down 20 points the other morning and it kind of got back above 44, there's no free lunch in this. You guys know that. But now that we've reached the 75 area, this is where sometimes I know you guys are sitting in front of the screens and the lights are flashing and the news is going off and there's all kinds of ideas coming through. This is the type of scenario now we can actually look what has shown its hands early. We've reached some targets. It might not be a bad idea to let all these things happen and just sit tight as far as trading the index itself and wait patiently until we feel like we have some edge and some odds and probabilities on our side. So, right now we've just gone a long ways in a short amount of time. We've reached the major inflection points, and we might have to sit on our hands a little bit here. Sometimes I say that, and if you're ready to go and ready to rock and roll with doing this number, I apologize, but this is kind of one of those times, in my opinion. We may have a chance to reach up a little bit higher into 94, but again, I think you're kind of in the ether up here, and it might not be a bad idea to just kind of, okay, I'm not a big fan of going short here, but a weekly close is going to really predicate how this thing's going to, as Tom would say, shake out. So this is one of those times. But, that being said, we can go into the scanner and we can try to find some things that just haven't really been cooperating that well on the north side. And I'm pulling up the S&P 500 because I know you guys are generally trading the S&P internals and trying to find some edge with those. And as we look at these, wow, there's an 8.2 earthquake in Malaysia. Didn't know that. I'll have to look into that. When did that happen? John from Philadelphia. That's news. That's pretty high level. Anyway, as we look at the stocks that might not have been cooperating on the S&Ps, you've got about 25 stocks here, and we can look at a couple of them. And I can look at the numbers, the colors, the arrows, the peelbacks, the what have you on here, and kind of get an idea of what might be attractive. So I'm looking at TAP. I mean, I just literally pulled this up. So I'm trying to find stocks that just haven't been cooperating with the move up. And if you look at this, Again, a blind man could see this. As we look at the bottom of our profile on the weekly, 86.97, and we go into the daily on Molson Coors and Brewing Company, 86.91 on the bottom of the profile here. This is a stock that cannot get out of its own way, all right? It's in the XLP, all right? We're going to look at the XLP. I'm just kind of going through a rote process here of trying to find opportunities and things that just haven't raised their hand on the long side and are definitely raising their hand, in my opinion, on the short side. We've had a really serious run in these S&Ps. From the bottom, I think what have we run up, about 175 points in the last couple of weeks? That's a pretty good bounce. Don't know if it's a bounce to short yet, as we had talked about earlier in this segment. But as you look for opportunities, and again, I'm saying, okay, wow, we're at that weekly big inflection point. I can't go long stocks up here. I don't know if it's a good idea to short the index, but let's try to find these opportunities that are within this realm. Again, showing their hand, and I'm looking at this bottom right here. And I don't know if there's any pre-market activity on this. Let me check. Not yet. All right. And this is one of them. All right, here's another one. This is kind of cool because PEG, Public Services Enterprise Group. Why is this so cool? And again, I just did stocks trading below profiles on the daily. That's all I did. But I'm noticing at this stage, Scanacorp, SCG, very possibly cool situation here. Yellow peel back happening on the weekly, which means, hey, we might be putting in a new supply area. Of all the things going on right now, instruments that are putting in new supply areas up top, that's kind of showing a little bit target-rich environment. But we're also saying, hey, we just crossed the border on the daily for the first time below profile. So let's take a look at this. Achimama, looking good. Weekly, got a new profile attempting to appear. This may have run out of gas, especially with the way it's acted the last couple of days with the S&P. I don't want to use the word love, but I like it very much. So SCG, put it on the radar screen, put TAP on the radar screen. Another little cool situation here. PEG, you know what? PEG was the same as SCG. I'm sorry. It's the exact same setup. Check it out. So getting below 42.73. Got a new profile appearing on the weekly here. Not the weakest things in the world, I will admit, but they've started raising their hand up. All righty. We got about 15 seconds for the first break. Another little situation here, NextEra Energy. Wow, this is cool. ETR. We're going to take a look at that after the break. That one's not as cool, but we're going to take a look at it right after the break, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Those questions in the den are just exactly in line with the financial topics that we talk about, and thank you very much. Not. You know, I heard something funny last night. You can lead a man to Congress, but you can't make him think. I don't know what's going to happen with this election. This is. It's like you got to get popcorn and just hang out and watch CNN and Fox right now. It's unbelievable what's going on. All righty. So I had a question. Somebody in the den actually asked a non-chicken related question a while ago. SCG, how did I get these stocks to appear? I literally simply just went over to this color-coded grid on the left and hit below. I just wanted to find stocks that just were not getting out of their own way on an intermediate time frame, the daily column. And I can go over here after I do the sort and kind of sort them. And I can see the number one in this red scheme on the daily. And again, guys who don't have the scanner, you should get it. From a sales standpoint, I always say that. But just kidding, guys. This is a great tool for me. I mean, I cannot run my trading day without it, put it that way. So, and you know, it provides a lot of different insight on different levels that you really can't get in any other type of software piece. So it kind of provides to me always things relative to balanced areas and then combinations of things I like to see. So when I hit this red button on the daily sort, I get, you know, just things that are just not getting even back into the daily profile situation. So a lot of these are deep red, like Potomac Electric Power Company. This is, I don't know if I ever explained this, but the deeper red these cells are, the lower, the farther away they are from the inflection points, and the lighter they are, the closer. So it's kind of cool that way. But that being said, SCG is why that popped up. Let's see. Here we go. So Tucker, I hope I answered that question. All righty. So, you know, we talked about a couple of different things that were on the radar screen relative to not being able to get out of their own way. And if you think we're at, you know, kind of this kind of all ties together to relative strength trading. If you think we're at an inflection point and have traveled a really good road north, what hasn't cooperated, and what are the things that people are just not clamoring to buy on this type of, you can look at it as a bear market rally up. It may be, we just saw some opportunities on the long side relative to some of the internals and what they were telling us. So when we go into our short term, by the way, excuse me, let me go to our daily for a second. We kind of stayed at this congregation of stocks trading above profiles relative to below profiles, and this number trading below profiles kind of started diving at the same time. And now that we've kind of gotten into, let's say, the 60% level on our stocks trading above profiles on the daily, that doesn't happen that often. We're at this major 1975 inflection point, and we're also trying to increase the odds at the same time by finding weak instruments to just, take out back to the woodshed. That hits a nerve. I've experienced that. All right, here we go. So as we go back into the dashboard, I'm going to just kind of clear all the sorting. You can also take a look at some things that may be, you could kind of throw this combination out there, and you can look at things on a weekly that have these arrows pointing down. That means that they've been in a defined downtrend. I actually kind of look at this PPL. Let's take a look at this one. All right, so okay, that's been in a defined uptrend. It's got the arrow up. Let me point that out. So that's what that is. I didn't mean to hit this. But anyway, it's a decent looking situation. We're at the bottom of a profile. We've kind of caved in a little bit. But lately, kind of what have you done for me? This thing has really kind of shown itself to be weak, especially in the last couple of days rally. Now, this is a utility, so there's been a little bit of a rotation here. Let's look at the utilities, in fact, for a second. Let's look at the ETF. Russ, I'm going to answer that question in just a second here. That's actually a really good question. So utilities had a little bit of a, in fact, let's just use this example. The question is on the TAS weekly yellow peelbacks or yellow bars, in this case, the XLU. Let me show you this in the scanner really quick. Let me reset the sorting. Let me go over here. Okay, see that yellow right there? I hope you guys are still seeing my screen. That yellow right there means that there's a new profile attempting to appear. And I'm going to, Russ, while we're answering this, I think we're going to take a call, and I think Tucker's on the line with us. Tucker, you there?
Yes, I'm here.
Great. Good to hear from you.
Yeah, good morning.
Good morning to you.
I missed before, and I shouldn't have. I guess I was distracted. When you hit that sort, those manual sorts are so powerful. Like when you hit that daily below.
Mm-hmm. Yeah.
I know you cover those really well in your videos that you have, but it is amazing how quick those work and how powerful those are. Like when you went and hit the daily below and what those pulled up.
Yeah, no, I thanks for saying that, Tucker. Yeah, I mean, the reason it's so quick on here is because, all these are data files that we're basically sending the end user or the client side from the server. So you've actually kind of got that refreshing every 30, 60 seconds. And when you click on these buttons, like I just looked at utilities, I was going to use that for example, but if I go into, Forex, futures, strong downtrend reversals, I mean, these are all kind of all sitting already available to you in a localized data file that updates. And that's why it's kind of quick. And if it was a real-time data stream, we're actually considering doing that for the charts. And I know you had pointed out a couple of charts that weren't exactly updating yesterday. That's a new feature, and we're constantly working on those stocks were in the other section, by the way. They weren't in our indices sections, and I appreciate you pointing that out. But we're trying to actually map a real-time data stream to those charts so they kind of, move real-time. But we still don't want to tamper with the exchange rules on, that scene. So, but
let me ask a question, if I may. If you go to the dashboard,
yep,
I'm getting the S&P 500. Did I miss something on the recordings that I can get multiple indices included in that sort?
Yeah. Can you stay on through the break, Tucker? I hear the music, and that means you got to go. But we'll be right back. We'll answer that question. It's a great question. Okay.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show, and I hope we still have Tucker with us.
I'm here.
Great. The last thing that you had asked about, you had mentioned the ability to kind of look at a lot of different exchanges at the same time with the sorts or with not the sorts. Is that what we were?
Yeah. For instance, the S&P 500 is the default, but NASDAQ has a list of stocks too, and if I want to do a sort, How do I get? And that was
Right. So are we back on screen here?
yes.
Okay, good. Just want to make sure we're seeing everything. Okay. All right. So yeah. So right now, if you go to the dashboard, it defaults right into the S&P 500 every time because that's just the way we thought people would want it. But if you want to look at, let's just say the NASDAQ at the same time, you can go in here and check that button. Or if you want to add the Nifty 50 or the Nikkei at the same time, you've got the ability literally to look across the globe in one glance here and also be able to do these sorts, and kind of narrow down, well, here's a stock on the Nikkei, here's two stocks on the Nikkei and one on the S&Ps that meet that criteria. And that, if that answers your question, I hope that.
Yeah, and then you do when you hit the reset sorting button there to the left, does that just take those off?
Yeah, well, I mean, it's gonna undo the sort. It's not gonna undo the exchanges that you check. So if I check these and then I do a sort here like that, and then I reset sorting, you're still going to have those exchanges. The only way to really clear them out in a kind of a one-click method is just go back to the dashboard, and then that resets it all to the S&P. Like that. Yeah. And the way you'd set this up is, you go to the home screen and you can set up your navigation for how you want to look at these. I know you already know this. I was just letting everybody else know.
Sure.
So
one other quick question, then I'll quit being a pest. You mentioned several times or during different presentations that there will be a new point of control appearing on the chart. For instance, after time, the new lines appear as to support and resistance or point of control. So let's say I have a 60-minute chart, and I go out and I look at that chart, and I see the point of control, and then maybe 2 hours later the market's gone up big. They've changed. At what point do those change?
You mean
by time period?
You mean there's a whole new profile that'll appear, or?
Yeah.
Okay. Yeah. So
is that a reasonable question?
Yeah, I mean, it's a great question, and there's a couple other questions we're going to get back to, but this one actually kind of pertains to some of those other questions. So if we go into the XLU, let's just use that for an example, and we look at our weekly chart here. So one of this, this yellow peel back in a green cell, or this yellow bar on the chart, they mean virtually the same thing. They mean that there's a profile, a new profile actually in place, but it's not locked in. And a lot of times, I can go on to East. I can show you a feature that. Let me just go in here and let me show you something. This might be cool for everybody to see. I can go in here to indicators, and I can actually have it show real-time boxes. All right, and that means that it'll show new profiles flashing and attempting to appear, and those unfair lows, POCs, and unfair highs flashing on the screen. But what I've found over time is, and that's the default mechanism in Bloomberg for the indicators over there. But what we found is, a lot of people just get frustrated because it's like, okay, wow, the box was there, now it's gone, or it changes position. And I don't want people to see something kind of optimize itself for later and switch around on a lot of platforms. We've got that option you can enable if you have indicators, but on the scanner and the way I like to actually use things, I like to kind of simplify it and kind of black and white it a little bit more. And my trading is probably a little slower than a lot of folks. It's more of, I guess, between a trader and investor kind of standpoint. I like to just say, you know what, I've got an indication here. That usually means I need to start looking at this as, hey, there's a whole new trading range that's going to develop. I don't exactly know where it is, but I need to be aware of it, and I need to prepare for it. And that being said, these new demand areas and new supply areas, new balanced areas, whatever you want to call them. There's an algorithm that says, I think we lost our chart again. There's an algorithm that allows for this to be outputted and thought about, and it's something that combines a lot of different things to where we say, you know what, this is the right moment for a new balanced area to appear, and here's the outer limits. And remember that definition of unfair high and unfair low we talked about the other day. That's kind of all incorporated into this, but this yellow bar or this new profile attempting to appear is just an indication that there's almost a stake in the ground, almost, and in this case, because it's a weekly profile, we need to see a Friday's close with this still in force in the scanner. If I go to XLU, I'll show you the same thing here. There's that yellow peel back. Now, if Friday's close happens and that's there, then Monday morning you can just bet that, 100% that there's going to be new inflection points that are going to just be locked in. That's the same case on all time frames. So on the 60-minute, and I'll just clear this, and we'll go in here and find some 60-minute, situations here. I just clicked yellow over here. Now, if you're trading, there's a lot of different ways to use this. Hold on, just 2 seconds. Got to tell some. Okay, there's a lot of different ways to use this. You can use this. You can put your own portfolio together. You can monitor when these things are going on. You can actually, use this. These are as profit targets. You can use them as combinations. These new profiles attempting to appear with other types of sorts. So, like before, I'm kind of a big fan of this sort. Like, we've had a good run. I want to see new profiles in a weekly attempting to appear, and these daily below profiles. So, these are the ones, this Scanacorp, PEG. Like, we've had a good run up. These are the stocks that don't want to go any farther and are also putting stakes in the ground on the upside on the weeklies. And I use that information in a sort a lot. So,
okay. Is that so? When the yellow is coming across, that's the potential then for a new
correct
setup?
Correct, yeah.
All right, Tom. Thank you very much.
Man, thanks for calling. Great questions. Okay.
Bye-bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that
that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And Dave, are you still with us?
Hey, John, how you doing?
Hey, man. Good to hear your voice again. I'm back in the saddle here. I was traveling the last time we were trying to talk. I hope you're doing well.
Yeah, I am. Thank you for asking. I can't imagine the amount of frequent flyer miles you have hopping between here and Hong Kong and the Philippines. And do they just like roll a limousine up to your house and come pick you up when you head to the airport?
You know, I wish. They're getting a little weird about all the. They're trying to tighten up. There's too many people playing that game like me now. But you know, it's a lot of times too. You know, like people can try to on that scene flag the same hotel, flag the, you know. But I use hotels.com and other Airbnb a lot of times. I mean, like I found that awesome place in Medellin on Airbnb, penthouse apartment. You know, $400 or $500 a week, 3-bedroom, 3-bath. You can't beat something like that. So I don't necessarily use the normal channels, but
no,
yeah.
you certainly can't beat the ladies of South America. That's for sure.
That's true.
Any time down there,
That's true.
The place looks like a beauty pageant. But anyway,
Miss Columbia. Yes.
The keeping it on trading. It's taken a little while, as you well know. I got an Apple computer. I finally got the VM Fusion software, bought Windows. So about $600 later, I now have a computer that'll run Windows and Apple. And then I was talking with Tom not too long ago, and he's, he basically convinced me to get off my wall. He's like, Dave, you got to get your head wrapped around this scanner. So I did it. And so now I'm using the scanner. And I'm running an experiment, John. I got to tell you, flat out, man. And the experiment's paying out quite nicely, I might add. I'm just doing like paper trading through.
Thank you.
Sink or swim. And check this out. You ready for this one? This is what I'm doing. I'm using the hourly scan. Okay.
I'm sorry. What
gets
now?
above.
I missed the last thing you said. What'd you say? It was before about the scan.
I said I'm using the scanner hourly.
Okay.
And I'm just paper trading. I'm not putting real money behind this. I'm just running an experiment.
Okay.
And the experiment goes like this. I'm using the hourly scanner, okay, on the futures.
Uh-huh.
And the moment an instrument gets above the green unfair or the green profile, the high, what do you call it, unfair high?
Uh-huh.
It gets above the unfair high, gets up, retraces back to the unfair high, we're going long. If it gets below the 60-minute, on the unfair low, retraces back. Again, I'm also looking at some volume characteristics, but even if the volume characteristics aren't what I would normally like to see, I'm just doing it just to see what happens.
Mm-hmm.
And then as new profiles appear, I'm just moving my stop up. So if I'm going long, and it starts to move in the direction I want it to go, and I don't get stopped out, the next time a profile appears, I adjust my stop to the bottom of that. And I got to tell you, John, it's rather unnerving in a very good way, because I'm thinking to myself, this is like idiot-proof, at least so far. I mean, I'm not telling you I didn't get stopped out along the way, but right now it's paying about 70%. So every dollar I risk, I'm getting 70, or out of every 10 trades, I should say, about 7 of them so far are making the cash register ring, and 3 of them getting stopped out. But when you go to a 3-to-1 risk, reward ratio, it's turning into real. I mean, not real, but paper trade. It's turning into this thing is turning into like a cash machine. And I'm thinking to myself, this is kind of unnerving because this is like idiot-proof trading. You can train a monkey to do this. I'm looking at this, I'm like, it almost scares me a little bit because you can become too dependent on this thing and forget how to trade. I'm like looking at this, I'm like this is too easy. I can't, what's the deal here?
Well, Dave, when you say the word cash machine, it scares me. I start shaking because then I think the FINRA or some other regulatory group's going to come in here and put me in handcuffs. But
right.
I appreciate you saying that in the notion of it. But I don't focus on a lot of the just day trading. I mean, this show's not live during the day of trading day. Maybe we can do some live shows during the day. We got to ask Tom's approval of that. And I don't talk about a lot of futures kind of action on the short term intraday. But my good friend and an associate in Chicago who does a lot of intraday trading with this, uses a lot of methodologies like you're talking about, and what it does really in a nutshell, I think you'd probably agree with this. Everything you just said is so true. I listened to every word of it, but it kind of allows you to have a roadmap and the ability to just kind of know when to say uncle and just try to trade the probabilities and the odds and say, you know what, I really fully believe that I'm going to be right more than half the time here, based on this methodology. And it gives you some, I'm just assuming what you're thinking, it gives you some kind of security that there is some kind of method to this. And, that combined with some of the things Tom's talks about and Basil and everybody else, everybody across the board on TFNN, putting some things in perspective when it comes to different methodologies and then using this as a confirmation tool or that kind of first tool, is not a bad thing. I mean, I always, kind of try to get a little bit different perspective on things and not try to get locked in. But what you said is very true. I mean, we use a color-coded system here and try to use, I specifically talk about these profiles on a day-to-day basis pretty much exclusively. But I don't get caught up in RSIs and all the other things, which I think they're great things as confirmation tools, but I just use the different time frames like you're talking about to try to guide myself through confirmations of, is it okay, okay to be long, not okay to be short, okay to be short, not okay to be long. And I hear what you're saying. But if
my next experiment is to combine it with everything else I've learned along the way, and because I've done a little bit of mental back testing. I haven't really documented on a spreadsheet, but a little mental back testing, because the crazy thing about it is a lot of times when an instrument's starting to break out and then it retraces, it forms a new profile. Well, what I'm noticing, John, along the way is a lot of times those profiles of support and resistance come at 618, 786 ratios. Resistance comes at 1.272 expansions of the last move. And a lot of what I've learned from Larry Pesavento, who's just taught me enormous volumes about trading, it's totally wild how that comes into play, how the scanner picks up some of the the retracements and expansions that I've learned from Larry, and how some of the churn points happen at price RSI divergence that I learned from Steve, and how it hits on swing points on volume testing that I learned from Tom. The point I guess I'm saying is, if you look at the scanner, a lot of what happens on support and resistance points confirm, to me at least at any rate, a lot of what I've learned from Steve, right. I learned from Tom, what I've learned from Larry, and it's kind of wild.
When those things come together, those are very powerful moments. One of the things I was going to ask you, if you don't mind, I'd love to have almost like a user standpoint on what you just said. If you want to record something of what you just said, of kind of like walking through a chart on that, I'd love for people to be able to kind of see that and almost have this user group when it comes to kind of things that are working out for different folks using this tool. I think that'd be awesome.
It's great. It's a tremendous, and Yeah, I'm not opposed to that at all. At this point in time, I'm about about 2 weeks into actually using it, consistently, and we'll see how it turns out.
Great, Dave. Thanks for calling in, man. Great.
Thanks, John. Appreciate it.
Yep.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. What great comments from Dave and also Tucker. Thank you for calling in. And one of the things Dave said, let me tell these people to stop Skyping me here. One of the things Dave said with the methodology that he's kind of observing and figuring out. I mean, there's a lot of different ways to use the scanner, and there's a lot of different ways to trade a lot of different instruments on here, but it's kind of based around your trading plan and risk profile and things like that. I mean, you can kind of organize this to fit your own needs. And a lot of people might say, well, tell us how to use it to the best advantage. Well, Dave has obviously a certain way he wants to attack the markets, and this is a way that kind of guides him through the minefield. On this show, I'm not doing a lot of intraday day trading. I'm trying to put some things this is the way I kind of have a portfolio that I look at, and I want to have the market tone in general. Look at some ETFs, look at the bonds and notes and all the other things going on. And by the way, I'm looking at copper right now, which is kind of a commodity thing we've been talking about that's kind of starting to bust out here above profiles for the first time on a weekly. I try to give you guys some global perspectives relative to these profiles. And, Dave, on the other hand, is kind of really, really ratcheting into the S&Ps in general. So a lot of different ways to use this scanner. I call it a scanner. It's got a lot more things in it other than just being a scanner, if you will. It's great to hear these different comments, and I'd love to talk to Tom about having some kind of user group for this thing for people's ideas. Maybe they can record them and have them as a kind of a library bank for people to kind of get some different perspectives in different ways. I mean, I could do 1,000 videos on different ways to do this, and it would be really nice to hear from everyone about ways that they're finding that that may provide some edge. We gotta look at crude oil here. We kind of had a pullback into that POC we talked about, which was really, really important. I still feel like this 3346 general neighborhood we pulled back to yesterday before, we're still going to use this again, a wide profile with a pretty significant POC here, point of control. This is in the scanner. But 3628 is going to be your targets on that, in my opinion. You can orient some stops around that POC. If we get stopped out, we get stopped out. Them's the breaks. You've got some ultimate targets at 3850 on that. Gold, and by the way, I apologize, Joey could not come on today, so we're going to try to shift that to tomorrow to talk about those China A shares, B shares, Shenzhen, Hong Kong kind of interconnected Asia scene, so we can maybe understand that a little bit better when things are hitting the fan and what to look at. Here's gold. Man, I got to tell you, Tom is probably spot on this one now. This thing looks like there's starting to be kind of a consolidation on this level, and that usually rips some shorts heads off when that happens on the upside. So I'm looking at that as a little bit more bullish situation than I have in the past, for sure. The dollar, I'm going to spend a little time on this. Again, I haven't been bearish on the dollar. I've been kind of waiting patiently until we get back across some borders. That's happened. You've got targets now, 98.77 on the dollar in the near term. And again, you probably would want to, if you're trading this on a long-term basis, and we kind of busted through this next level recently. And this is something else Dave didn't talk about. When we have these yellow peelbacks happening, like here, which you'll see in the scanner, a lot of times we'll travel that whole fair, we'll at least explore that fair auction. So no indications on the dollar slowing down yet. Guys, you've been great, and thanks for the callers. That's great to hear from Dave and Tucker today. Stay tuned for Larry and Tom and Steve and Basil and David and Daryl and Andy Heck and everybody else. Just stay on TFNN, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.